All right, hello everyone. So in today's video, what I want to be doing is breaking down a trade that I'm currently in right now. So this is a pound US dollar trade, and I'll start out with the weekly. Okay, so we have a lot kind of going on here, but it's actually pretty simple. So from here to here, this high, this long-term high, so this long-term low, we have our dealing range, and this is based on a monthly basis. Okay, so we can see this high here was taken out, and then we have this old low which was taken out down here, which makes this whole swing low a dealing range. Okay, so we have premium up here, and we have discount down here. Now this is from a monthly perspective. Okay, and also down here we have a monthly buy side imbalance, sell side inefficiency, which price rejected. So right now, currently, we're working within a market maker buy model, and I can start the framing actually all the way down here. This is the first discount level from a monthly basis where a an imbalance was retested. Okay, so that's a monthly DISI. Okay, and so yeah, price left that area, came all the way back down into this bullish order block, monthly bullish order block. Price rejected it. Okay, it didn't take out these highs, which is somewhat important. We did get a wick right here, um, which formed the basis for this to act as a projection block. Price came back down into this monthly DISI, and from that monthly level, with our time frame alignment, we would go from monthly to daily. So this monthly DISI is down here. You can see we got our market structure shift. Nice reaction from that monthly DISI. Taking out this high right here, um, inverting this sell side imbalance, sell side inefficiency, but ultimately the price that we came back into at about 50% of this range from low to high. And I'll take this cursor off because that's kind of distracting. Let me see how this is moving now. Sorry. So yeah, I wanted to scale off of my position soon. I'll go ahead and scale off here now. I'll take some of my position off. So I'm taking off 33. This is kind of annoying. Trading two accounts that are not copying each other. I'll take that off. Okay, so yeah, I was just taking partials on this position. I'll explain what happened here in a minute. You're not going to be able to see that screen. I'll probably do it in a separate recording um, after I finish my analysis on TradingView. But kind of just moving back here, and I'll take this cursor off and just use the arrow or the pointer. Okay, so what I was watching um, this week, after all this happened, so this is a lot of price action, which frames the basis for a market maker buy model. Okay, so um, down here, or technically it was down here where we had a smart money reversal, but this was our new range. So we want to work within a different time frames weekly dealing range. we'd be using this high, which is long term buy side. I have it labeled as monthly buy side liquidity. Um, but this high here is the high of a weekly dealing range, and then this low is um, the low of that dealing range, a weekly dealing range. And so if we were to, um, I'm gonna delete this and then I'm gonna add it back. It's not really pertinent to price action right now, that old monthly dealing range, because we have a new range that we're keying off. But I'll use this here. This is our weekly. Technically, we're still in premium. Long term, I'm buying in premium, but the damage has already been done. This market maker model is already set to occur. It's already moved up past 50%, so we're in premium, and I'm currently in a buy. I have my sights set on these relative equal highs, which you can't see from here, but I'm going to drop down in time frames. But anyways, what happened was we got a nice rejection from that monthly BISI. It ended up leaving a weekly imbalance, which price came back into, and then we had a nice displacement away from that as well. So that's what I'm going to be really focusing in on. So from the weekly, so we got a weekly key level, and with time frame alignment, I want to see a 4 hour reaction from it, and we got that here. So we got a little stab into the top. It actually was a retest of this old weekly BISI, but all of this was nested within this BISI as well. So we came down, stabbed into it. It really was this one that I was keying off of. But we got our 4 hour displacement away from this old high, this short term high, which created this long term low or intermediate term low, and left this 4 hour buy side imbalance, sell side inefficiency, which I was using to continue to frame this market maker buy model and take out this high and ultimately this high up here. Um, so yeah, from this 4 hour level, so this was last week where we got our stab into it last Friday, and then price left that area and then created a higher time frame, a daily buy side imbalance, sell side inefficiency. So this is the level I'm working off of now. This daily buy side imbalance, sell side inefficiency. I know everything I just described was a mouthful, but essentially what we're working within is a higher time frame, monthly, that is, um, market maker buy model, and I'm just using all of the time frames that are lower than that, but that are also higher time frames. So I'm using the monthly, weekly, daily, and the 4 hour to frame a buy. Okay, and so all of these time frames are being respected, and I'm keying off of this level here. So this was from today, actually, where we had price sweep. Okay, it swept this low. All right, and that was important. So price came down, swept that low when the 8:30 um, in the morning news driver came out. It swept London's sell side, which I'll get into. I know I'm explaining a lot, but it swept London's sell side, and now it's making its way higher into these relative equal highs, and most likely it will at least get to consequent encroachment of this weekly buy side imbalance, sell side inefficiency. Okay, so I'm going to drop down to the hourly. With time frame alignment, I go from the daily to the hourly. So let's see how price left this daily BISI from an hourly time frame. Okay, so this is Tuesday and Wednesday's price action. We can see here we have Wednesday. Okay, Wednesday London sell side liquidity, and also Asia sell side liquidity. Okay, so I want to mark that off here. and that liquidity is resting right at the top of this daily busy, which is important. Just a lot of things converging here. I had to take this trade because it's just beautiful. Um, Now I can see price is hovering around this level, which I'll get to soon. But anyways, I'm going to label this here as London sell side liquidity, or LQ. Okay, so we got our suite of London sell side right here. So this big candle, this big bearish candle, was the 8:30 in the morning news driver this morning. So we can see it swept. It did the damage, cleared sell side. So anybody who was holding for a long this morning, they got stopped out, and then smart money used their orders, okay, to offset their position and take and go long. Okay, now this is also an hourly bullish order block right here. Okay, all three of these candles form a bullish order block. You can draw that out. You can see that lines up nicely with consequent encroachment of this daily BISI. But once we move from the BISI, we get our hourly marker here. See, what I normally like to look for is I like to look for an hourly sweep. Okay, an hourly sweep from a daily BISI. The only thing is we had this big news driver. Okay, and this is my trade that I have um, like measurement for on TradingView. I also have the actual trade as well, which I'll have to stop this recording and start a new one to see it. But anyways, I'm gonna get into this. So this is an hourly market maker model. I knew that price wasn't going to come out and sweep this high to where I could frame a setup during today's silver bullet from 10 to 11 a.m. So instead, what I was looking for is I was looking on the 5 minute time frame, because with time frame alignment we go from the hourly to the 5 minute. So I was looking for a 5 minute market maker buy model within the news event manipulation. Okay, which was basically instigating people to go short. But I mean, with so many things lining up from a higher time frame, from the monthly, the weekly to the daily, we're obviously going to be going higher. From the hourly, I'll drop down to a 5 because that's what's most pertinent. To show you guys what I was looking at. Okay, so this inversion fair value gap is what really uh, that's this is the level I was using basically to frame along. Okay, now the reason why this one is so important, and shout out to ICT for everything really, but specifically for this, he's been putting out a 2024 mentorship series the past couple of weeks. And one of the things that I think was in my head somewhere, it's just, but it wasn't something that I was actively paying a lot of attention to, was the inversion fair value gaps that have already been used. Okay, so this is a sell side unbalanced, buy side inefficiency, which it did its job on this side, or the sell side of the curve of this market maker buy model. It did its job in taking price lower. Okay, so the sweep happened, news event happened, it did the sweep. Okay, but then when price came back up into this sell side imbalance, buy side inefficiency, it it acted as resistance and took price lower below consequent encroachment of this daily buy side imbalance, sell side inefficiency, or fair value gap. And then once that happened, what I was doing is I was monitoring this high as well as this inversion fair value gap, because once I saw price close above this inversion fair value gap, I was like, okay, I want to see price come back down and test it, but that with this candle here that formed, I was like, that's not likely to happen. Um, and yeah, price just started to run come 10 o'clock, which is where I'm looking to engage. Okay, so what I was really looking at here was this here. and I'm gonna go ahead and draw it out because it's a 5 minute fair value gap. That's and this trade is actually about to pan out and be a winner for me, which is nice. Now I know this is trading view, but what I'm going to do is I'm going to turn this off in a minute and go to what I'm actually watching. Okay, so here's what I was talking about. Um, this is a trade that I'm currently in on my funded account challenge through funding traders, and I've already pulled off 80% of my position. Once price closed above this, oh man, I'm having a brain fart. But yeah, once price closed above this level here, and all this level is a breaker. It's a 5 minute breaker. But once price closed above that breaker, okay, or once it really got into it, I was really looking for the 858 level to take 80% off. And I'm playing small ball right now in this account. I'm currently in drawdown, and I'm going to be making a video series where I talk through every trade that I make on this account. And yeah, that's going to be coming in the future. But yeah, I'll be starting a series in drawdown, which is different. So you'll get to see me start out in drawdown and crawl my way out of drawdown, and then ultimately, you know, I'm looking to get funded, obviously, on these two accounts. But yeah, right now this is the profit that's sitting with 20% left on. I'm only risking a quarter of a percent for each trade at this point, so I'm risking about $62 per trade. And when I pulled off 80% of my position, I'll go ahead and show what that uh, looks like here. So we're going to go to close positions, and right there, so $58.41. So it's a little less than a quarter of a percent. I wanted to get a whole quarter before I closed off, but price started to run against me. It's no biggie. But anyways, I got back what I lost yesterday, plus a little bit more. Um, and really, yesterday was a winning day. It's just I tried to get in and do something during the PM session on the futures, specifically the S&P, and ended up closing out too early. If I would have held my position based on where I was before, I would have got a winner. But I closed out early, took a loss, then tried to swap positions, or I mean, swap my direction, and the direction was wrong when I swapped. So yeah, but without getting too much into that, the main reason I started recording on this account here is because I just wanted to show that I did actually take a trade on what I'm talking about in TradingView. I'm not just talking hindsight here. You can see I entered down here at the level that I said I would enter at. It didn't come all the way down into this fair value gap, which I was highlighting, but it did come down into this one, and I just put my stop below these lows here, and I was expecting this inversion fair value gap to hold, and all that happened. It was beautiful. Okay, and so I do want to highlight that fair value gap right here. Okay, so this fair value gap is what I use to take my entry. The price had a nice once it came down. It basically it priced outside of it a bit, and I believe ICT talked about this as well. If I'm not mistaken, this whole thing will be counted as a fair value gap, but I don't know. He's teaching new things now, or he's been more specific about certain levels, which is nice. But anyways, I use this level. With what I know, this is a at least a fair value gap from here to here. Price came down and mohawked outside of it. Didn't matter because price still left the area, and then it left this buy side imbalance, sell side efficiency open, which is a breakaway gap. On some on some broker feeds, this is showing up as like institutional order flow entry drill, which is a powerful signal for continuing to go in the direction that it was going in. And we can see here, I'm about to get my TP. Now, my TP is below where I believe price is going to go. Like, it's well below it. Like, these are the relative equal highs that I was monitoring, which I believe is an old daily high and this intraday high here. And so price is, it's going to go ahead and hit those levels and, um, or hit this level. And then I'll end the day with just over a 0.25%. So I don't know how much it'll be exactly. 58 plus about 23. What's that? What's my math? It's about 81. So yeah, 81 is over 30% of this account. I mean, it's decent, right? Nothing to, and there we go. See position closed, and that's that, right? So if I would have just held and not took a partial right here, I would have got half a percent on the account. But I still got a pretty good win today. For the week, I'm up 151. So for the week, I'm up just over half a percent, which is decent, because I've been trying to make my way out of drawdown. And give me just a moment. All right, I'm back. So we can see that price is, it just took out our intraday high, and now I'm looking forward to take out this high back here. And so this is I believe it's a daily high, an old daily high. Yeah, so this is the 13th, so Tuesday's high. Yeah, I'm looking for Tuesday's high to get taken out. And ultimately, like, this is a market maker buy model. So I mean, it's obvious what we're doing here. I mean, this high is the draw on liquidity. We got this daily buy side of balance, sell side efficiency. We've already had our market structure shift daily. Okay, when we took out um, this short term high here, it wasn't a huge, displacement above it or anything like that. But it doesn't have to be. It took that out, and then we came back into this daily busy. So this is basically the ICT 2022 mentorship model on a daily time frame. And I believe we may have SMT here too as well. Don't quote me on that though. Um, we don't have to. Like, it doesn't matter if we have it or not. I don't really care. But the main thing is, like, I mean, this is delivering like perfectly. Um, okay, so yeah, it's getting really close to it. I'm looking forward to check out that high as well. But yeah, that's it though. That's the whole trade breakdown from today. I did want to come on here and just break it down since I got to recording it later. I didn't expect for price to kind of take off the way it did, but that was nice. Like, I thought I would get a deeper retracement into this fair value gap, but this fair value gap was enough because I made enough room for my stop loss to be below that fair value gap just in case I wanted to reprice into it. Where ultimately this as far as entry parameters go, this inversion fair value gap is what was bolstering my um, faith in price continuing to go higher from this level. Because usually, like I said, I usually like to see a 1 hour displacement, but because we had this inversion fair value gap, I was like, okay, this is going to be left open, breakaway gap. This is going to act as support, inversion fair value gap. And then this here even acted as a breakaway gap. So we have two breakaway gaps in here. Well, three breakaway gaps, I'm sorry. Which on some feeds, on some broker feeds, this is like showing where these are the same lows, which would be institutional order flow entry drill. And then price just, that's a powerful signal that, we can use to watch price continue to go in the direction that it's going from that level. Okay, so that's exactly what we see here. So I'm going to wrap this video up. Like I said, I'll be doing these breakdowns. Most likely, I'll be going live and just documenting my way out of drawdown, which is nice. So thank you guys for tuning in. Have a great rest of your day.